Hi, good morning, everyone. Morning. Hi. Morning, everyone. Hi, good morning. Welcome, welcome. Can you hear me properly, everyone? Hi, morning. Hi, good morning. Can you hear me properly? Yeah, everyone. Hi, good morning. Can you hear me? Hear me properly? Good morning. One second. One second. Yeah, now be okay. Now it might be clearer, right? Can you hear me now clearly? Very clearly? Yeah, everyone? Yeah. Okay. Chalo. Let's start. Yeah. Welcome to the first lecture of BFM, official first lecture. Yeah. On Saturday, Friday we had done, but we had done that orientation class. So today will be the actual first lecture of BFM. And today's topic is exchange rates. Actually, the topic is bigger, exchange rates and forex business. But exchange rate, when I say, it means we are dealing with forex business. Okay. So here, understand the meaning of this forex, foreign exchange. Where does forex come into play? Foreign exchange comes into play when I'm dealing in two or more currencies, two or more. If I'm dealing in only one currency, then foreign exchange rate is of no use. Because here, if I'm having, let's say, keep it very simple. Whenever you are exchanging something, only then whatever you have, currency or whatever, it is of any use. Suppose if you don't exchange, okay, then that currency or whatever you have is of no use. Similarly in forex also, suppose if I'm comparing dollar versus rupee, then only it's called as forex. If I'm only giving in rupees and getting money in rupees, then that forex is of no use. So it should be at least two currencies. At least it can be more than that. Okay. So, what are the factors that determine this foreign exchange rates? Foreign exchange rates means here. Today dollar is, let's say, 85 something, 83, 84, right? One second. Suppose today dollar is, let's say, imagine it is, let's say, 80. Now if it goes from 80 to 85 or it goes from 80 to 75, why does it go? Why does it move in this direction or why does it move in this direction? It's simply the rule of demand and supply. Demand and supply. Very simple. Everything in this world moves on the rule of demand and supply only. Everything. Let it be anything. Everything is based on demand and supply. Now, how does this demand and supply get affected? There are two, three reasons. Mainly two types of reasons. One is fundamental reason. Fundamental means what? This is always a long-term reason. Long term, very long term. For example, means what are the basic factors in fundamental reason? First is balance of payment. Generally, surplus leads to a stronger currency while deficit leads to a weaker currency. Means in the long run, if I'm having good balance of payment, it means I'm having a stronger currency. Now, once I say balance of payment, so immediately something should strike your mind. Balance of payment means what? What is the meaning of this? That should strike your mind. What is balance of payments here? There are two things basically in with any country. One is balance of trade, BOT, and second is balance of payment, BOP. Okay. Now what is this BOT and BOP? Sir, it's simply, I'll tell you very simple terms. It is current account and savings account. Current and saving. Okay. What do you do in current account? In current account, we have all the business transactions, business, right? Business. And in saving, what do I have? I have, see here, there are two things in this BOT and BOP. Okay. Let me explain you with more example over here. More clarity actually. Hold on. Let me bring in one new slide. Okay. Hold on. Because that should be clear in your minds. Okay. See this. What is the difference between BOT and BOP? Suppose if this is BOT, what am I doing in this? And this is BOP. What am I doing in this? In BOT, I am doing trade, only trade, business. And here, I am doing remaining things. Remaining means which are not related to trade. Okay. Now understand one point. This is current account. This is savings account. So here, what do? I do all the import export. Import and export. Here, what do? I do the remaining things. Means FDI, FII, FPI, NRI payments coming in. These are all into BOP. Or my country taking loans. Loans means these are called as ECB, external commercial borrowings, ECB. Okay, these all come under BOP. And BOT means what? Very simple. Current account, import, export, import, export. And now one point you understand regarding this BOT and BOP. Very simple point. Suppose if you are holding the current account with any bank and you are holding the savings account with any bank. So at the year end on 31st March, okay, March 31, let's say you are having, let's say, 5 lakh rupees additional in current account. 5 lakh additional plus means all you have done import, export, everything done. And you are having surplus 5 lakh rupees, surplus. So where will this 5 lakh be transferred to? Will this be kept in this current account only? Or will it be transferred to your savings account? Because after all, it's whose money? This 5 lakh rupees under this current account is after all the owner's money. If this is a proprietorship firm, this 5 lakh belongs to this owner. So similarly, what happens? The net of BOT, remember, net of BOP, BOT will always be transferred to this BOP. Always. So what does BOP include now? BOP includes number one, net BOT plus all the remaining things that FDI, FPI, NRI, all these things, they'll come over here. Okay. So my BOP includes, always remember, BOP will always include some component, net component of BOT also. Okay, coming back. So this is a basic difference between BOP and BOT. And what happens is many times we read all these things, BOT, BOP, everywhere we read. But we don't understand the difference. And many times what do we feel? BOP does not have any component of BOT. It's not that. BOT will always be present in BOP as a net component. It's current saving account. Okay. Okay. Next one. Move on. Economic growth rate. The higher growth rate leads to rise in imports and fall in the value of the currency. Now, what do you mean by this? It should be the higher growth rate leads to rise in exports. It should be exports. Okay. The higher growth rate will lead to rise in exports, and basically it will lead to rise in the value of currency. So if India is rising now at around 7%, okay, means they are predicting. Yesterday also finance minister told roughly will be growing at 7%. So if we grow at 7%, what will happen? Our growth output will increase. Why is China dominating the world now, presently? Why is China? The reason being, their growth rate was very huge. They have become the production house of the world. And the one who has the production house will always dominate the world. So this, if India grows at a high growth rate and becomes the production house, so in that case, what will happen? In that case, India will dominate the world. Okay. So economic growth rate, high growth rate will lead to rise in exports and rise in the value of the currency and vice versa. Fiscal, now see here, we are talking of long-term ratio factors over here. We are not talking of short-term factors. Okay. Fiscal policy and expansionary policy means what? See here, again understand, fiscal and monetary. Okay. These two policies. Always remember, fiscal policy. Let me bring in some, remove this if possible. One second. So that was done. Let me write it over here. Again, understand something about fiscal and monetary. What is fiscal and what is monetary? Fiscal and second is monetary. Okay. Who gives which policy? Fiscal will always be given by the government. Always, always, in any country. Monetary will always be given by the central bank, or we call it RBI in our case. Every country, it's the same scene. Fiscal will always be given by the government, and monetary will always be given by this central bank. Okay. Now there are two types of policies in both. Fiscal also expansionary, expansion. Monetary also expansion. Both of them, they can have expansion. Okay. When RBI wants to expand its monetary policy, what will it do? It will reduce repo and CRR. Okay. When government wants to do the expansionary policy, what will it do? It will reduce taxes and increase that rebates and mainly rebates and subsidies. Okay, and vice versa. Suppose if it wants to contract, then RBI will increase these two, and if government wants to contract, it will increase these two. Now, important part about this fiscal and monetary is always remember, monetary policy is a support to fiscal policy. Always remember, support. Okay, monetary policy will always support fiscal policy. Main is who is the hero of the film? The hero of the film is government. Hero of the film is not RBI. Okay, RBI is a supporter to the government. Okay, why? Because RBI's monetary policy, always remember, these are temporary. RBI's policies are temporary, short term. Okay, mainly. Of course, they are having long-term policies also, but mainly they are focusing on short-term. Whereas in government, they are on long-term. So RBI's policy will always support government policy. It won't be, RBI doesn't have any existence without government. Remember this. Government is there, that's why RBI is there. It's not vice versa. So, coming back, fiscal policy. An expansionary fiscal policy means lowering of taxes can lead to high economic growth. Monetary policy, the way central bank attempts to influence and control interest and money supply can impact the value of the currency of the country. Obviously, isn't it? If some bank is going for expansionary policy, it will have high growth rate. Now, one thing I'll tell you about expansionary policy also. There are good points and bad points. Regarding, let's speak about RBI only, because we'll be mainly focusing on RBI's monetary policy. Suppose if RBI goes for expansionary policy, what happens? Expansion. Okay. What happens because of that? What happens is mainly is only not able to download PDF. Okay. Just check it. Others are able to download that PDF now? Everyone? Everyone is able to download the PDF? Okay. Chalo, move on. Yeah. Expansion. So if RBI goes for expansionary policy, what happens? Number one, it increases growth. Growth means what? GDP. It increases GDP. Okay. This is the positive point, plus point, right? But what is the negative point? Negative point is it increases inflation. Always GDP and inflation go hand in hand. GDP and inflation go hand in hand. If GDP goes up, inflation will definitely go up. That's what is happening in USA now. Look at this USA. Okay, but it's a typical reverse case now in USA. On USA, what is happening? Inflation is increasing. Inflation. But GDP is decreasing. That's a reverse case happening because of some wrong policies over there. Okay, but GDP is going down. They are expected to grow at around 1.5% in the year. in the coming years over here. So remember one basic logic: growth and GDP and inflation will always go hand in hand. Okay. So now move on. Interest rates. High domestic, we are all talking of fundamental reasons right now. We are not talking of technical reasons. High domestic interest rate tend to attract overseas capital. Thus, currency appreciates in the short term. This is for short term. Means if my interest rates grow up, what happened in USA from October to December, even present, mainly December only, December 22. Okay, if you see this time, all the stock markets in the world were down, all of them. Why? Because the money over here, money in these stock markets went from those countries to USA. Why did it go to USA? Because USA increased the interest rates during that period, and this central bank was going on increasing almost a complete year. It was going on increasing. Because of that, what happened? Suppose if I am the investor, I have money in, let's say, India. So I'll see that the bond interest rates in this USA are going from, let's say, 3% to 4%. So how will I calculate? 3% to 4% means 1% on 3. So 33% rise. So that's why I'll see higher rise over there and I'll move to USA. So same thing happens. Higher domestic interest rates tend to attract overseas capital, and thus currency appreciates in the short term. In the longer run, however, higher interest rates slow down the economy. Higher interest rate means here, it's again the reverse thing. Expansion and contractions here. If I'm increasing the interest rates, repo and CRR, it will slow down my economy. GDP will decrease. Inflation will also decrease. Okay. So, political issues. Political stability is likely to lead to economic stability. However, steady and hence steady currency, while the political instability will have the opposite effect, right? So, political stability means what? The government should have a majority over here. So that is called as political stability. We call this as pestle analysis. What is pestle? Political, shall I write it? Political, economic, social, technological, and environment. And last one is legal. Okay, so this is known as pestle analysis. This is done by every country or every investor who is a big investor before investing in any country. Political, economic, social, technology, environmental, and legal. Now let's come to the short-term reasons. Very short-term. Short-term means these are limited to max 3 months or 6 months. 3 to 6 months. Fundamentals are related to minimum 2 to 3 years. This is mainly for 3 to 6 years. So what are the technical reasons? Government controls can lead to unrealistic value of the currency. Government controls means government controlling the currency. Controlling currency. Now, which government controls the currency? In India, we don't control. In India, see here, one thing, again, I'll tell you something. In India, rupee is partially convertible. Partially. What do you mean by partially convertible? Partially means under BOT, balance of trade, it is fully convertible. Fully means what? If I get some order tomorrow for 1 lakh crore dollars, 1 lakh crore dollars from some foreign country, okay, and it's a genuine order, then what happens? My government or RBI cannot question me. Why am I transferring this 1 lakh dollars or getting this 1 lakh crore dollars, whatever that amount is? Central government or any government can't question me on this because rupee is fully convertible under BOT. But here it is partially convertible, BOP. Why? Why it is partially convertible? Because this deals with what? FDI, FPI, NRI, no business. It is not dealing with any business. So if I'm not dealing with any business and then I'm getting dollars or sending dollars, then definitely there's some element of doubt over here. If some NRI is sending huge money tomorrow to India without any business, So definitely there is some element of doubt. Why is that NRI sending the currency? So that's why their questioning will happen. Questioning, and partially convertible and fully convertible means questioning only. This is the only difference between fully convertible and partially convertible. In BOT, there won't be any questioning. Not questioning means definitely minor questions will be asked, but there won't be any restrictions on this. But in BOP, there would be restrictions on this. This NRI can't send more than so and so amount. Like LRS scheme, I can't send more than 2,50,000 dollars per year per person from India outside. I can send it outside. So that comes under BOP. But nobody can say, no, you can't do a business beyond $250,000 per year with any country. No, you can't say that. So that's why BOT is rupees fully convertible over here. Now, government controls. Government controls on currency means what? Government always, in India, we don't meddle with the currency in India. Okay, over here. But if you see the other countries like China, China always has control over its currency. One night, there was one some 5 years back or 6 years back. China in single night reduced its yuan currency by 7% within a span of 1 hour. So if such thing happens, that is called as government controls. In India, our currency is totally dependent on demand and supply. No RBI, no government interferes. Never ever. Okay? We don't interfere in the currency rates. Government doesn't interfere or RBI doesn't interfere. Of course, there are other measures through which it interferes, means indirect measures. Directly it can't. Okay? So move on. So, unrealistic value. Government controls can lead to unrealistic value of the currency, resulting in violent exchange rates. Okay, violent means very huge fluctuations. Of course, if government is controlling, then I can do anything, isn't it? Freedom or restriction on the capital movement can affect exchange rates to a larger extent. Capital tends to move from lower yielding currency to higher yielding currencies. Means what? Lower yielding, which is having lower returns, to higher returns. Why do you see major these FIIs, foreign institutional investors, okay, from US, coming from US to India? Why do we see that? Because the interest rates in US are lower than that of India. Now they have increased this year. Otherwise, the US interest rates were around what? 1%, not even 1%. In India, we were having around 5.5%. So that's why every investor will try to invest in the higher yielding country. See, here it's very simple. Suppose if you yourself are having some funds, let's say you are having 1 lakh rupees, okay, and you want to input in some FD with some bank, what will you do? You will try to see which bank is giving you maximum rate of return, and you will invest there. Of course, looking at the safety, you won't invest in any smaller bank or some smaller chit fund company which is giving you 20% return, because you know the chit fund company can close their shop anytime, right? You'll check at the safety of the bank first, and then check what is a higher yielding or a higher returns bank. Same thing this FII does. Which country is giving me higher returns, plus which country is safer? These two things. So definitely capital tends to move from lower yielding to higher yielding. Speculative forces can have a major effect on the exchange rate. Speculative means what? These are all called as traders. Traders. What do you mean by traders? See here the traders are not the single human being. Here they can be companies, many big companies, okay, who buy and sell dollars. So these are called as speculative forces. Means similar to that of the brokers. If you try to get a flat, okay, or land anywhere, okay, in your area only, wherever you are in India, you'll always have a broker. That broker will tell you, sir, buy this plot today. After 1 year, there is a road coming up near this plot. The rate of this property will go up. So same thing happens with this dollar also. Traders tell the banks and other institutions, these are the middlemen. They tell the banks and other institutions and any company as such, who are their customers, that buy this. US is doing so and so thing. So what will happen? After 1 year, the US dollar rate will increase. So buy this now, sell it at that time. So speculative forces have a major effect on the exchange rates. In an expectation that currency will be devalued, speculator will short sell the currency for buying it back at the cheaper rate. So here devalued. Devaluation means the currency rates going down. Why does currency rate go down? Because that happens due to, I'll tell you one major reason. You all might have seen the printing of notes, printing, right? Printing of notes where notes in India as well as in that USA also, anywhere. Okay, printing of notes. If you have huge currency, suppose if I am having huge currency of notes in India, what will happen? The value of that currency will be lower because it is having huge supply. So if any country goes on printing of notes heavily, the value of that currency goes down. It gets devalued. Same thing happened during that Notebandi. Why was Notebandi carried out? Because there were duplicate currencies happening, coming up in India. With the same, every print, everything was same, and you couldn't figure out. In fact, these were original currencies printed with in some other countries. Check the Google for this. Okay. So in that case, what happens? The value of your currency gets devalued, and whenever and there's any devaluation, the speculator or the middleman, he will short sell. Short selling means what? Short selling means I'll sell now. See, there are two positions. One is called as long position, and second is called as short position. Short position, short. Okay. Long means what? BTST we call it. BTST. Okay. Buy today, sell tomorrow. Buy today, sell tomorrow. Short means what? STBT. STBT. Sell today, buy tomorrow. Okay. Sell today, buy tomorrow. Why will I sell today? If I'm expecting, let's say, any dollar to go from 80 to 75. If I'm expecting it to go down, what will I do? I'll sell today at 80 and buy tomorrow at 75. Similarly, the reverse thing over here, BTST. Okay. So remember, short position means STBT. Sell today, buy tomorrow. Long position means BTST. Buy today, sell tomorrow. Okay. Now something for you. The term foreign exchange is used to denote dash as well as dash of one currency to another. So foreign exchange means what? Foreign exchange is used to denote dash as well as dash. Now this is what you have to answer, you guys. Okay. So what can be the answers for this? It is used to denote one. This is number one answer is foreign currency. This is from your book. Huh? These are from your books because your exam questions are many times asked from these books only. Foreign currency as well as the dash of one currency into another. What is the one currency into another? It's obviously exchange. Exchange of one currency into another. So forex totally means both the things, foreign currency as well as exchange also. Okay. Yeah. Short sell means sell today, buy tomorrow. Short sell. Okay. Means I'm selling something which I'm not having. Understand this. I'm selling something which I'm not having. That is called as short selling and buying at a lower rate tomorrow. Okay. Okay. The exchange rates of major currency fluctuate every dash seconds. Now this is a separate answer. See, there are many answers to this, but the answers given in your books is 4 seconds. 4. Okay. The answers given in your books is 4 seconds. Means the exchange rate of any country fluctuates every 4 seconds. Now with the advent of technology, these 4 seconds have gone. It moves at a nanoseconds now. Okay. Now for you guys now, stay true or false. The forex markets are dynamic and round the clock markets. Is it true or false? The forex markets are dynamic and round the clock markets. Is it true or false? What is this? True or false? Dynamic and round the clock. Round the clock means here, correct. It is true. Those who are watching on YouTube, today the first demo class. So you all are having the same class on YouTube also. So kindly answer in the comment section on YouTube. Everyone, I am seeing this. Even I am seeing the YouTube classes. Okay. So true or false? It is true. Correct. Because it's round the clock market. Round the clock means what? When India sleeps, USA gets up, right? So that's why when the forex market over here is closed, the forex market in USA runs, and vice versa. Forex markets are not affected by government policies. Is it so? Second one, not affected. Are forex market not affected by government policies or affected? That is the major reason, right? They are affected because that is the only reason. Because if the government policies change on a constant basis, then the forex market is gone for a toss. Okay, what has happened to Pakistan? What are you seeing in Pakistan today? Okay, what is the Pakistani currency today? $1 was earlier, means a few years back. $1 was equivalent in India, almost equivalent. Okay, almost equivalent to Indian rupees in Pakistan. Almost. I'm not saying exactly. Pakistan was obviously devalued earlier also, but today we are at around 80, and they are at what? 245. Means they have gone almost from 100. Earlier they were around 100. From 100 to 245 in 1 year. Why 1 year? Because of the government policies. Wrong policies made by the government. Sri Lanka, what happened? Same thing. Sri Lanka, same reason. Wrong government policies. Okay. So government definitely affects the forex rate. A large part of the total global forex turnover results from global commodities trade. Commodities. What do you mean by commodity? Commodity means there are all of them are commodities, right? What is a commodity? Commodity means it includes oil, it includes gold, it includes what? Dollar, right? Any other commodity, oil, gold, dollar, anything else? Yeah, who can? Thanks, Vadav Sala. Okay, yeah, thanks, sir. Chalo, yeah. Which all commodities, right? So here, no, it is not true actually. This is false. This is false because commodity turnover is not that much in the world. The major turnover is of FIIs, foreign institutional investors, FIIs, huge turnover, FIIs. Commodity is small part of that. Small means not that small also. It's around 20-25%. 20 to 25% is in commodities. Remaining 75% is all of us, like that NRI, FII, FPI, and what FDI. All these things relate to this remaining part. Okay, so commodity trade is there, but not to that extent. 20-25%, it's okay. Yeah. Yeah, everyone, those who are watching on YouTube, subscribe to Officers Adda 24/7 YouTube channel. Everyone do it first. Those who are watching on YouTube and also those who are in the class. If you have not subscribed, subscribe to Officers Adda 24/7 YouTube channel. Why? Because in this channel, you'll be getting, here, I'm taking 3 series in this channel. Okay, 6:30 a.m., 7:30 a.m. and this 8:30 a.m. Okay. So 6:30 is for JIB, 7:30 BFM CAIB, and 8:30 is for BFM ABM CAIB. Okay, so these are the 3 series which we take. So definitely join this, and you will get various other sessions also. Not only mine, there are many other sessions, and this is available free. So whatever is free, grab it first, isn't it? Simple logic. The logic of life is what? What is logic of life? Free equals to I want it. It's that simple, right? Free equals to I want. If somebody is offering something for free, you'll definitely go there. Sale. You'll definitely go there, isn't it? So apply the same logic over here. Okay, move on. Yeah. Most of the forex deals are on spot basis. Now, what is this spot and all this? You have studied this in your JIB also. Okay. Most of the forex deals are on spot basis, meaning thereby that a delivery of funds takes place on the second working day. Now, what is if this is spot and what are the others? We had this in our JIB, na? Everyone. Did you have this in JIB or not? Or no? Everyone, yeah. You had this, na, in your JIB. I know nobody will tell now. Yes, we had it because Otherwise, you'll have to answer the questions, right? So cash ready means what? Same day, T plus 0. T plus, have I written this over here? No, T plus 0. Tom means what? T plus 1. Spot means what? T plus 2. And forward means greater than T plus 2. Remember now, this forward is different. Greater than T plus 2. Okay. And what is this future? Future means the same here. Understand one simple logic behind this. Okay. This cash, Tom, ready, spot, you all know, right? You have studied it. I'll explain this future because this you don't know. Okay. These all things you already know. Suppose if I'm doing any transaction, means here, suppose if I'm selling you this land today. Okay. Let's keep it simple. I have a plot. Okay. I have a plot. Plot means that land area. Okay. I have a land area with me. I am selling you today and telling you that, okay, give me the money today itself. So if I am telling you, give me the money today itself, I am dealing in cash ready. If I am giving you this land area and telling you, okay, give me the money tomorrow or second working day, not only tomorrow, working day, okay, then I am doing Tom. If I am telling you that give me after 2 days, T plus 2 means tomorrow and day after tomorrow, give me day after tomorrow. Remember, spot you will always get confused. Next to next working day, or some books write this second working day. Second working. It also means the same, next to next. Okay. So spot means there are two words, second working day or next to next. Both mean spot. So if I tell you that give me the money on the second working day, I'm dealing in spot. And if I'm telling you, give me the money after any day, after second working day, means from 3rd to 10 years, you give me any time. So that is called as forward. So forward means any day after spot. Remember, any day, that is important. And what is future? Future is organized forward. Now, what do you mean by organized forward? Sure, it's like this. There are two types of forex markets. One is OTC, and second one is organized. Organized. Okay. What is OTC and what is organized? Okay. OTC means over the counter. Over the counter. Okay. What do you mean by this over the counter? I'll give you one simple example. Suppose if I'm in the bank, okay, and I'm getting one customer, okay, some customer is there. That customer comes to me and says that, sir, I want some loan. And that customer is a good customer of mine, very good. 10 years of relationship, good balances, everything is there. Okay. So what will I do? If I have a good relationship with this customer, financial relationship, not personal, you shouldn't have personal relationships with with the customers. Okay, you should have financial relationships. Okay, otherwise it's a big problem, right? If you go on making personal relationships. Okay, so coming back. So over the counter, what happens if the customer is having good financial relationship with me? Then what will I do? If my rate of interest is 10%, and the customer says, sir, the rate is higher, can you reduce this? So what will I do? I'll speak to my senior and try to reduce this from 10 to 9.5. I'll tell my senior, sir, good customer, very good balances. We shouldn't let this customer go. So reduce this some part. So this is known as OTC. OTC means I have a chance, I have a leverage of coming down with the rates. Whereas in organized, it's not possible. Future means organized. Future. This is future. You can't change anything in future markets. You can change everything in forward markets. Because forward markets are OTC. Future markets are organized. Okay. These are called as packets. These are sold in packets. Always remember, futures are sold in packets. For those who want to understand, try buying some options in the stock market. Options are always future market, completely packetized markets. Okay. Whereas forward is one-to-one market, like we buy those shares. These are all forwards. Okay. Move on. The date of delivery of funds and funds on the date on which the exchange currencies actually takes place is known as a value date. So whenever the exchange of currencies actually takes place is known as a value date. So forward rates are derived from the spot rates and are the function of spot rates and forward premium or discount being quoted. So how do we get the forward rate? Always remember, forward rates you get it through simple equation. spot plus premium, or if it is discount then minus discount. Now how do you decide whether this is premium or discount? What is premium, what is discount? Suppose if today, let's say today, here foreign currency is always quoted in spot, always remember for today. So suppose if I am having some spot rate of 80 rupees, let's say 80.23. See this example I have taken over here. Okay, if I am having this rate of 80.23 and 33 over here. Now what is this 80.23 and 33? Now understand this also. This also you need to understand. See this 80.2333. This left side is known as bid or buy. Bid buy, bid buy. Remember this. Bid or buy means sale. And right side is known as offer or sell. Offer or sale. Okay. So bid, offer, buy, sell, buy, sell. It's like this. Bid means it's buying rate where I'm ready to buy. Offer means where I am ready to sell. So this is known as a spot rate. Now in spot my rate is 80.2333. Means what does it mean? Suppose if I am the bank, I am ready to buy at 80.23 for $1. And if I am the bank, I am ready to sell at 80.33 to any customer who comes to me. Okay. Now this is known as spot. Now how will I decide whether it's premium or discounts here? Forward markets, forward points are given always. Okay. So forward point means what? It's always 10-20 for 1 month. Let's say I'm giving one example. It can be 5-10 also. It can be 5-2 also. So depending on that. Or 2 month it is, let's say 30-20. So how will I decide whether premium or discounts? Here, when your right side is more, right side means the sell side is more. Okay. So if I'm having right side more, I'll have a premium over here. Whenever I'm having left side more, I'll have a discount over here. So what will I do? If I see some premium currency over here, I'll add it. Means suppose if somebody tells me today's rate is 80.2333. Now buy rate is 80.23. 80.23 buy rate. Suppose if somebody asks me, what will be the rate after 1 month? So in that case, what will you do? Who can answer me now? Okay, let me ask you these questions. 80.23 is the rate today and 1 month is 10.20. So what will be the rate after 1 month? Who can give me the rate after 1 month now? After 1 month. Okay. Who can give me the rate after 1 month? 10.20 I'm having it, right? So after 1 month it will be, I'll just add this 23 plus 10. Why? Because it's premium. What did I say? Spot plus premium. Whenever it's premium, I'll add. So 80.23 plus 10, 80.33. Suppose if I want sell rate after 1 month, again the same logic. 80.33 plus 20. Remember, 20 I'll add now. 33 plus 20. So 80.53 it will be for 1 month. But if I want any buy rate for 2 months, so it is 30-20 discount. So what is the rule? Spot minus discount. So if it is spot minus discount, what will I do? 80.23 minus 30. Remember, let it be buy or sell. You will always subtract it if it's discount. So 80.23 minus 30. Similarly, if I want a sell rate, so 80.33 minus 20. That will be my sell rate. So always remember for spot, for coming to the forward rate, we have to add premium and subtract discount. This is the main point in this forward and premium discounts. Okay. This I think so we have done it. Yeah, there is some important part, but let's cover this later. Not in tomorrow's class. I'll cover this one part. See this. The following is the interbank rates quoted in the forex market. Calculate the interest rates for inward remittance and outward remittance. Value spot assuming the margin of 10 paise lower than the 10 paise over the interbank rate. Now this is the spot rate given, and what have I to do? I have to decide the rate on the of my bank, considering the margin. Now understand this. How does the banks actually deal in forex market? Look at this. There are two things. Banks are not the complete institute who holds all the currencies. Bank is just one part of this here. If this is the full market, forex market, okay, if this is my complete forex market, bank is just over here. Remaining, there are many other elements like big companies, like let's say Reliance or Adani or Tata. These companies hold many a times more currency than the banks. Okay, there are brokers in between. Brokers, these all players totally function in the forex market. So bank is just one part of this, all these elements. So what happens now? Now understand one important point. So if this is the spot rate going on, spot rate means what? See this 75.0050, 75.0075. So what is the buy rate now? Who can tell me? 75.0050. What is this buy or sell? Who can tell me? 75.0050. What is this? Buy or sell? It is buy, correct? So this is buy mine. This is buy. And similarly, the other one will be sell. So sell is what? 75.0075. This is my sell. But whose sell and buy is this? This rate is of the overall market. This complete market is 75 point this. This complete market is this 75.0050 and 0075. Now, if I am the individual player in this, I have my own cost, my employees are there, right? My bills are there. So will I buy and sell at the same rate going on in the market? No, I'll have to add the cost of the employees also. I'll have to add the cost of the technologies also. So in that case, what do? I add, there are two rates now. See here. One is the basic market rate which is going on. Second is forward rates. Forward. Just now I discussed that premium and spot, right? And third is exchange rate. Exchange. Exchange means what? This is the cost of the company. Exchange means basically the whole trading which is going on, all the software, everything, this is the cost for that. So your any problem will be having three parts always. One is the basic rate of this complete exchange, whatever is going on in the market. Second, you'll have forward rate, and third, you'll have exchange rate. In some problems, you may not have forward rate, like this one. There is no forward rate given. What is given? Spot rate is given and exchange is given. So in this case, what do? We don't apply forward rates. How do I decide whether it's forward is applied or not? See here. In this problem, if they give you find the rate after 1 month or after 2 months or after 15 days, then I'm dealing in forward. If they are not asking me find the rate after 1 month, 2 months, or they are asking me today, whenever they are asking me today, I am dealing in spot. Whenever they are asking me after 1 month, 2 days, 15 months, whatever these days are, anything after spot, okay? If they are asking me anything after spot, I am dealing in forward market. Okay. So now in this case, what are we dealing in? Are we dealing in forward market? No. We are dealing in what? Today only, means spot only. So that's why we are in spot. So what do we do now in that case? So this forward is gone. Now I'll deal only in exchange. What is exchange given? 10 paise over the interbank rate. 10 paise. 10 paise. Now see here, it's not given in percentages. It's directly given in paise. So what will I do? See here, how do I deal with this exchange margin? Remember one basic rule. This is also called as TT margin. Either they call it TT or exchange. Both the things are same. So what do we do in TT margins? Remember, whenever we do any sell transaction, we will add this 10 paise. And whenever we do any buy transaction, we will subtract the 10 paise. We will subtract. Whenever I am doing any sell, I'll add the sell paise. Whenever I am doing any buying, I'll subtract it. Okay. So just I'll add this, apply this logic. Okay. Now you'll say, sir, why do I add in sell and why do I subtract in buy? Can anyone tell me this? Why do I add in sell and why do I buy in this subtract in buy? Because here we read everywhere in the books that yes, for selling we'll add this, for buying we'll subtract it. But why? Why can't I? Why selling I can subtract it? The reason being, why can't I subtract it? Because I'll tell you. Yes, I'll give you simple logic. Suppose if you are having some, let's say, one computer. You are a vegetable vendor, sabji wala. Okay. You are a vegetable vendor. Now the vegetable in the market is available as let's say 10 rupees kg. Okay, in the market means you go there to the thela and buy that, you'll get rupees 10 rupee per kg. Okay, now what happens, this vegetable vendor comes with the with his all that what gadi, right, all that is the van or hadgadi we call it, right. He comes to your door, here he is coming to your door. Okay, and there you are going to the market. So what will this guy do? Will he give you a 10 rupees or less than 10 rupees or more than 10 rupees? Definitely he'll give you at more than 10 rupees. Why? Because he is coming to your door. There's a cost involved over here for coming to your door. So this cost will be added over here. So that's why whenever this vegetable vendor will sell you at the doorstep, he will add this cost. Same thing I'm doing. I'm selling the dollar. So this TT margin, I'll add it because I'm a vegetable vendor and I'm coming to your door. This currency from various markets I have brought it and I'm selling it to you. So I brought it this vegetable from the market and selling you at your doorsteps. So I'll definitely add this TT margin. That's the basic logic. Understand this. Here, understanding is very important. Otherwise, what happens? You'll just learn and land up nowhere. Okay. Chalo, move on. Let me complete the problem today. Okay. Yeah. Let's remove all these things now. Okay. Let's focus only on this numerical part today. Okay, this part. So move on. So what should I do now in this case? Now it's simple. Once you understand this, what is to be added and subtracted here. So if I have to, what is asked to you? Calculate the rates for inward and outward remittance. Inward means what? What is inward remittance? When do I have inward remittance? Okay, let me discuss this also. Inward remittance. When do I have inward remittance? Whenever I'm selling something. When do I get money? Okay. When do you get money in your bank? When you work in the bank, means you give out something. Something goes out, then something comes in. Means is haath do, us haath lo. Don ka rule, right? Don, you saw those Hindi movies? Don ka niyam, is haath do, us haath lo. Same thing happens over here also. I sell the goods go out, dollar comes in. So is haath do, us haath lo. So what is this then? If goods are going out means definitely it is export. So when is inward remittance? When do I have inward remittance? I have inward remittance in export only. When do I have outward remittance? I have outward remittance in the reverse case. Goods come in, dollar goes out. So that I'll have it in imports, right? So what do I do now? When I'm having inward remittance, which rate will I apply? See here, for inward, I'll always apply inward. I'll always apply buy rate, buy. For outward remittance, I'll always apply sell rate, sale. Okay. So now I want the rate for my buy. So what amount will I take? Let me remove these things now. Which one? Okay, let me write it over here only. For inward buy, what is the rate? It's easy now, 75.0050. So I'm doing buy. Buy means what? I'll subtract the TT margin. So minus what is given 10 paise. So 10 paise means 75 point this. Always take it from the right side. 0, what is this? 10. 1, 0. Okay. So it will be 75.0040. This is my buy rate. Okay. Always remember, whenever you take the currency rates over here, take it from the right side. Always take it from the right side, rightest side. So 10, I'll take it over here. Okay. Next one. So second one is, suppose what is this interbank second one? 75. So 75 will be what? 75.0075 plus it is 0.0010. So it is 75.0085. So that will be my sell rate. So if I sell it, I'll be selling it higher. If I buy it, I'll be buying it lower. Okay. So got it, everyone? Yeah, there's one more numerical, but we'll solve it tomorrow because this numerical will take almost 15 minutes, 10 minutes, at least 10 minutes. Because this is a big numerical. We'll solve it tomorrow. Okay? So we'll stop it over here, guys. Okay? Yeah, 85. Good one. Many of you are answering. Okay, one more point. Those who are watching on YouTube, okay. Those who are watching on YouTube, kindly focus. We have this batch. It just now started. So you join the batch ASAP. Because now you have seen how do we teach as such. Okay. So join the batch ASAP immediately. Okay. I'll tell you how to join it. There are huge discounts going on, man. Okay. Huge discounts. So go for this. See here. Look at this. Look at the go to the front page. If you're having the app, go through the app. Click on JIB and CIB. So this, you'll see the CIB 23. Click on CIB 23. You'll see this. The details you see this. CIB ABF new selection batch. So click on the selection batch. Click, you'll see the details of the batch. What, when is it starting? What are the dates here? ABM already started. I am taking ABM. BFM I am taking. These two batches I am taking myself. So these have just now started. ABM also not many classes have gone. Okay, you can join this. Recorded videos are available. Study plan is there. Okay, join this SF. I would say because after all, not more than 2 months are remaining, man. 2 months is a long time now. It's shorter than 2 months now. Look at the fees part. 5279. Click on this. Okay, remember this code. I forgot to tell you. This code is Y432. This code will give you 80% off if you are using it in this site. But if you are using it in the app, it will give you 1% extra. This 80 becomes 81. Huh? So that's why you'll get extra discount in the app using that all coin system. So join this 4799. 4799 for 6 months. Right? If you're having the Mahapack means 15 plus batches. That's a huge story. Okay, those who are in the batch and those who want to upgrade to Mahapack, okay, I'll give you the link also tomorrow in the class. Okay, you can upgrade to Mahapack means 15 plus batches per subject. If you even attend each batch singly, only attend, not even learn, then also you will automatically learn because 15 times revision happens. Okay, so 15 plus batches are there, ebooks are available, tests are available. In Mahapack, you get electives also. In Mahapack, you are getting importantly, remember electives. Okay. Now again the fees part. Money is important. 76.99, 78% off. Click on this. Put the code Y432. You'll get it again 80% off. Look at this, 80%. Okay. Mean the fees is 699.80 for 12 months. Double validity. And 15 plus batches per subject. ABM, BFM, ABFM, BRBL. All these 4 compulsory subjects, 15 plus batches. My God. It's less than the tea expenses which we do for on a daily basis in our banks. Okay, but everyone has understood this. Tell me first. Yeah, thanks, sir. Thanks, Rajesh. Rajesh has written nice class. Thank you. So have you got the concept? Important is getting the concept, not learning. Never go for learning. I would say in CIB you should never ever go for learning. You should understand the things, and CIB is about understanding. Because suppose, right, in it's like this warfare. CIB is like the head office. Okay, warfare. If you go in the warfare, do you learn the things and then fight? No, it's up to you. How much have you understood? Isn't it? So it's like that warfare only. JIB was up to the branch level. JIB is very a bit easier. CIB is like this whole world is against you. It's that way. Okay, chalo, bye. Bye from my side. Even I have to leave now. Okay, chalo, bye. Bye everyone. Yeah, tomorrow. Again, Jay. BOP, remind me, huh? BOP, BOT. Or you can watch the video also. I've just, this recorded video is available. Watch that, okay? So, bye.